Dear students and working accountants, welcome to my Smart Tally Prime YouTube channel. Before we enter into our topic, one advice to you. See, if you want to gain expert knowledge in this Tally Prime GST and become expert accountants, please follow all my videos in the same order in which I uploaded the videos. In the case, you follow like that, you gain a lot of knowledge, expert knowledge, and become expert accountants. Again, another important information is I started online classes because offline classes is not possible for me. That's why I started online classes. That's going on. See, within a few days, mostly from 1st May, I will inform the date and I will keep the video also. I am going to start a new batch for the online classes, only online classes, but these videos are free, YouTube channel. But the online classes are not free, they are paid classes. If anybody is interested to join the online classes, you can send your details and register your names. My contact details are given in the about section of the channel. Got the mobile number and email address. You can send email with your details. But from the mobile number, you don't call me. Just you send WhatsApp message, because if you call me, I will not get the call, because I am in some other country. For few months I will be here. So you send only WhatsApp message with your details. I will call you and talk to you. Okay. So after that, we will fix the date of fixing the date. Mostly it will be 1st May. I will inform you, and from that day you can join and you can learn the subject. This is the very important thing. And one more thing is, generally I used to tell you at the end of the video about the subscribing and everything. But now I'm telling in the beginning itself. Please, everyone who have not already done, please subscribe to my channel. Just don't see and go. Just to see the video and go. Subscribe to my channel and click the bell icon and select all, so that you will get notification for all the videos which I upload. And share the channel, my channel, the Smart Tally Prime. Share the channel with all your friends and also any other person, even working accountants, who want to learn Tally Prime with GST, and share with them. And while watching these videos, you watch every video till the end. Don't skip the video, because see, in every video, every topic will be discussed with the rules and the meaning, rules, and what about all the details about that particular topic. And after that, we will start the how to implement that particular topic, particular item, how to implement in the Tally Prime. That is how to implement and how to record in the Tally Prime. So if you skip the video, you cannot understand how to record in the Tally Prime using that particular topic. That's why you please watch the video till the end. And after watching that, if the video is good, you just like the video, click the thumb icon and like the video. And also in the comment section, don't forget to post your comment about the video. So any problem, what is the video? And is there anything you are not understanding, or you did not understand, or any problem? All these things you post in the comment section. That is the communication between you and you. So please don't forget to comment. Okay. Then now we will enter into our topic today. Today our topic is what we call, our topic is additional charges in purchase and sales bill and the calculation of GST. That is how to record the additional charges in the purchase and sales bill, calculating the GST. That is the thing. And these additional charges means, example, freight charges, packing charges, freight charges are then delivery charges or transport charges, packing charges or packing material, handling charges, insurance charges, or any other charges. They are additionally, these charges are paid, entered in the purchase bill, the sales bill. How to, these are available. Then how to enter them in the purchase voucher or in the sales voucher or sales bill. That's what we are going to learn now. So we will go to Tally Prime. Here, first of all, we will take the purchase voucher. See, for example, I will show you one bill. See, from GST Activation Company. From GST Activation Company is the seller, buyer. The buyer is default accounting allocation. So this is our company now. The company is, this is our company, and this is the company. So this is the company, check up this. So default allocation company. So in this, this is the sale by the person, GST Activation Company. Now we are buying. We are in the same state. So CGST and LGST is applied. So now this is the sale by them. So we have to record in our purchase voucher. So how to record in the purchase voucher? See the date. See the date. Date is 2nd April. So take 2nd April and we are purchasing. So you have to enter in the purchase voucher. You have to enter in the purchase voucher. So in the purchase voucher, you have to take, and what is the bill number is 3, 2nd April. So bill number is 3, 2nd April. The name of the company is GST Activation Company. And here, there's that. And when you are purchasing, you are have to enter select purchase only, and then you will see what are the items. See, only one monitor, 2 numbers, at 10,000 each. So monitor, so 2 numbers at 10,000 each. Like this, there may be many items also. And then here, that is the only thing. And then already we know before our this particular this present topic, we have learned about the automatic or manual rounding of the bill invoice or GST ledger or invoice rounding off, and then how to calculate, how to record the discount. So discount allowed on sales, discount received on purchases, cash and credit discount, that is discount column, or cash or credit discount, or discount allowed on the total bill amount, that is on the total taxable value, not the total taxable value, the discount will be valued on the net amount, the discount will be calculated. This is what we learned. Now this is also just like that. So here, so this is over, and then in that case, we have given on the bill amount, so discount is allowed by them. You see, discount is allowed, discount allowed on sales by them. So they allowed discount of 2%. So it is discount received on purchases. So it is income. So what you have to do? We have to create the ledger is not available. We have to create discount received on purchases. Discount received on purchases means it is not actually direct or indirect income. Income received, discount received on purchase means it is income. It is actually on purchase discount is direct income. Direct income you can take, but it is better to take purchases account, because if you receive discount on purchases, that purchase discount account amount will be reduced from the purchases, and on the balance only tax also calculated. That is why we have to reduce the discount, reduce the discount from the purchases. So I have to take purchase account, that is purchase account group. We have to group the purchase ledger. And here, in this case, so this is not cash or credit discount, so it is allowed on the total. So here we take it as not applicable. Then this will be used. Discount will be used deducted from the taxable value for calculation of the GST. That is what given here. Assessable means taxable. So include in assessable value calculation for GST. For GST calculation, we have to include in including the assessable value means, including means we have to add. It is minus value means if we add minus value, it will be reduced. So GST, and we are dealing with goods now, in goods and based on value. So if you do this, so here, what is the amount you are given? 2%. So when this is discount, it is to be reduced. So we have to do minus symbol 2%. Definitely it is calculating 2%. And after that, he is charging additional expenses, packing charges on sales. Now it is for us. For us, it is expense now. So it is called packing charges on purchases. Packing charges on purchases. See, for the purchaser, whatever expenses are paid on the purchases for bringing the purchased goods into the company, to bring them, whatever expenses are paid are all direct expenses. They are already they will add to the value of the purchases. That is why. So that's why here also this is added to the sales. It is added to the purchases. So in this case, we are purchasing. It is added to the purchases. So we have to take all the expenses in the purchase account. So in this case, this is also to be what to do. This is to be added to the taxable value or assessable value. That's why here we go no, not applicable. Then assessable value GST goods based on value. So this is we will do this, and then no percentage. It is given as 200 rupees. So it will be given 200 rupees, and freight on sales. So this also freight on sales for him. Freight on purchases. Purchases. This is also to be added to the purchase account, and not applicable, and assessable value is to be included for GST and goods, and then based on value. So here what is the amount given? 100 rupees. So 100 rupees is given. Understand how to record that? Right. And then SGST, CGST. Sorry. SGST, CGST. See the amount 1,194 rupees. So if we go to the tax analysis, Alt A, Alt F1, you see first of all, 400 rupees discount is allowed. So the total value discount received on purchases, it is discount received on purchases, it is reduced by 400 rupees. Then packing charges for 200 rupees is for the total. 200 rupees is for 20,000. Only one item. So 200 rupees is directed. It is added, and freight on purchases is also added. So 20,000 minus 200, 400 is 19,600 plus 300, 19,900 net amount. So the amount is calculated. Okay. So here also the same thing here. It is, but these charges on sales. Here the charges on purchases. So on the purchases, all the direct expenses, they will be added to the value of the goods. If you purchase some goods, if you bring by auto or transportation charges, even if we pay, that will be added to the cost of the goods. Okay. And then, so like this is purchase revenue. New reference number 3, see bill number. So what you call, see his number is 3. So our serial number is 1, no problem. Supplier invoice number is 3, it is taking 3. So like this, we have to get that in the case of purchases. Okay. So in the case of purchases, it's the same thing in, suppose how we enter if we sell. So he gave a bill. So now we will take up a sales bill. We will take up a sales bill. For example, we sold to Ranga Traders. Ranga Traders is the data. Okay. We sold to Ranga Traders. Then we have to take sales ledger, to take as sales ledger. We will take up some other computer. See, Dell computer, 1 unit, 20,000 rupees. Then another one, Dell keyboard, because it will be a different rate, tax rate. Dell keyboard is 1,600 rupees. So this is one. Okay. Now when I was giving, we can allow discount also. Well, it's not, if it is called as discount allowed on sales. There, discount received on purchases. Here it is called discount allowed on sales. So it's not necessary. Now we will take up some charges. See here, for example, it's not there. Packing charges on sales. Packing charges on sales. So here it is actually for the seller. All these are indirect expenses. They are not direct. They are not related. But packing charges without package, without packaging, without packing, The goods cannot be sent. That is why only packing charges should be added to the sales account. That is, it will be added to the sales value. Because without packing charges, or you can take it as indirect expense also from the buyer. You can take as indirect expense also. The same thing here. Same settings here also. Same setting, including the school value, GST, goods, and based on value. So here, for example, packing charges 500 rupees. So packing charges 300 rupees. Then we'll take up insurance business. We'll take up insurance. Insurance insurance charges on sales. So this is all indirect expense. This also take the same thing, same calculation, same setting, not services, goods and value. You take this, and here the insurance you take as 500 rupees. And now see GST, here GST. See now, here these are two different rates. This is 18%, this is 12%. In such a case, this will be allocated on the basis of value and on the basis of definitely on the basis of that. See, you will see this here. Now, how the tax is calculated. You see here, packing charges are added. Packing charges are added. See how the packing charges were. Now you see here, the insurance charges are 600 rupees. On 21,600, there are two items. On 21,600 is 600. Then what is the amount on 20,000? This 500 rupees. This 500 rupees is on 21,600. In such a case, what is the amount for 20,000? Same thing. 600 is for this one. What is the amount for 1,600? Like that, proportionately it will calculate. You see here. 20,000. Insurance charges 600 rupees for 21,600. Then what is the amount for 600? 200. That is amount, expense amount divided by the total value into the respective value of the item. 20,000, and that is 555 silver. And the packing charges 500 is for 21,600. Then what is the amount for 20,000? Then it will be 467. Total amount valid 21,000 change. That is calculated at the rate of 18%. That is 9 plus 9. And in the keyboards, it is 1,600 only. So here, 600 rupees is for 1,000, 2,000, 21,600. Then what is the amount for 500 rupees? You see, 44 rupees. So 555, 56 plus 44, 44 to 600. So like this, it is calculated. And this is the total amount. 1,600 plus 81. It is calculated at the rate of 6 plus 6. That is 12%. So like this, it is completed. And then CGST, GST. So even before that, if you see the tax calculation, it is shown correctly. The same thing here. 1,092, that is 2,800, 2,900 change is the tax. 2,900 is the tax. So 3,000. 3,985. 3,985 is the tax. 3,985 not to 985 not to. That is the total tax. That is the total tax. That is the total tax. Okay. 1,783.34. Okay. Mm -hmm. 648, 98. So 1,985 12, 1,985 12, 1,985 12. This is the tax. So that is how in the sales we will calculate. And remember one thing, for the seller, these expenses are indirect expenses, or we can take only packing charges as deducted sales under the sales ledger, and all other charges, insurance, everything, all other charges you have to take. And insurance on sales, 1 minute, here insurance on sale is not indirect expense. Indirect income, this is, sorry. This is indirect income because we are collecting sales, we are collecting from sales, selling goods and collecting the money. So along with the sales, this also we are selecting. So we have to take this sales one, income, or here also indirect income. Indirect income it is. Indirect income or packing charges you can take to sales account. Okay, indirect income, like this you take. So for this seller, these are indirect incomes. For the buyers, expenses only, but should not take indirect expense. You have to take it to purchases account. Okay, like this it is calculated. This is called additional expenses. So when there are additional expenses charged in the bill by the seller how he entered the bill, that we know, that you can know, and also how the buyer will enter that. So when you are buying from the purchase bill, how we will enter. When you are selling, how we will enter. That both of the cases we have learned. So this is the topic today, that is additional charges or additional expenses to be recorded with GST. So in the case, sometimes this can be without, suppose if you want to deduct, if you want to charge them without sales, without GST. If you want to charge them without GST, then what to do? Without GST, in that case, what to do? The same thing, I will take up Ranga Electronics again. I will take up Ranga Electronics. Only sales will take, the same thing can do there. Say here, for example, monitor. One monitor, 6,000 rupees. So purchase. So we sold for 6,000 rupees. Now, in this case, what we have to do? We have to charge the, for example, packing charges. Okay, so these packing charges here we are adding to that, and we are adding to the residual value for calculating GST. So that will be added to the residual value and GST will be calculated. But here, suppose if you don't want to calculate GST on these charges, that means GST will be calculated only on the taxable value. See here, the amount will be charged only on the taxable value. Even though this is added, for example, 500 rupees packing charges, 200 rupees. So total will be 6,200 rupees. But the tax, now the tax will be calculated as per these settings. The tax will be calculated on the total amount, including the additional expenses. Suppose if you don't want to include the additional expenses for calculation, then this on the 600,000 rupees only, the tax will be calculated. The packing charges, additional expenses, any expense, tax will not be calculated. In such case, in case of any expense, in this case, what we have to do is here, type of ledger, here you have to take, here type of ledger is not applicable, and we have to make, instead of this, we have to make one setting. So go to F12, here is select appropriation method of allocating to allocate additional cost. That means additional expenses. So you will do that, and here it will ask you additional, method of appropriation. So if you take by value, and this will go. So this setting will gone. So in this case, see here, 200 rupees are given, and for example, freight will give, freight is not there. Insurance charges will give, insurance charges. But this also, so here it asks you the same thing by value, and you select this, and if you give insurance 200, this is also 200 rupees. Now we see, if you calculate GST will be calculated only on the taxable value or assessable value. That will not be calculating these two items, not be calculated. But in the stock value, it is 6,400 rupees. The stock amount, it will be added. The cost of the stock will be added. See here, you see CGST, GST. See here, it is 12%. It is 12%, means 6 plus 6. 6 into 6, 6,000 into 6% is. See here. See here. Only on 6,000 rupees, tax is calculated. The transported, additional expenses, they are not included. So for calculation of the tax, it will not be included. For calculation, it is not included because the setting is different. Here you have to go to F12 and you have to select appropriate method. You have to make yes, and then it will ask you method of appropriate by value or by quantity. Sometimes packing charges for each item, the charge will be there. In such case, for each item, packing charges appropriate by quantity. There are 5. One item is 5 numbers, another item 3 numbers. In such a case, you have to they can calculate. So by quantity or by value, and select this, and this is over. And now we go and see. Actually, this is calculated 6,000 plus 3,000, 63 is 720. 6,720 only will, sorry, 6,000 and 400 will be the cost of that value of the goods. 6,000, this is tax paid. 6,400 rupees will be the cost of the stock item, but tax is calculated only on the tax bill value. So now it is saved. Now you see the value of the stock item. So how you will see? I already know how to see the stock summary. So go to display more reports, then go to inventory books, then go to stock item. Stock item. Now we have taken Dell calculators now. Monitor. Yeah, monitor, not monitor. Will be your value. Definitely to take 6,000 rupees. And Raja Ranga Electronics, this Ranga Electronics sales. Sorry. Only the purchase, the purchases it will be available. Purchase only we have the stock. No, so we'll take it as purchase. We'll take it as purchase. So in this case of purchases, it will be in the case of purchase, I'll take 20 number. So okay. The purchase only we are purchasing the stock, so we'll have the stock value. That is sales, that is it's going outward supply. And see here, 200 rupees, 200 rupees, and GST and GST will be calculated. %. And when they are at night, you check up their mistake. Telangana only. Discount received and purchases. Sorry. This is purchase ledger we have to take. Purchase ledger. So we have calculated all these things. Purchase ledger. They are taken. Now we can go to the stock. Item. I'll come to this. So display more reports, inventory books, then stock item, monitor, not monitor. Yeah. Monitor. See here, monitor. See here, this is the second thing. 6,000 rupees plus 400. 6,400 rupees. See, voucher number 2. One quantity, 6,400 rupees. So that amount is added to the stock value. But this is about this. The GST is calculated only GST get GST. So GST is calculated only on the taxable value. On the additional expenses, the tax is not calculated. So like this, you have to do. In such case, if you don't want to calculate, if you want to calculate, the setting will be different. So here, if you don't want to calculate, you have to take this F12 and F12, you have to take, see, appropriation method, yes, okay. Otherwise, if you want to calculate, instead of this, what you have to do is, instead of this, you have to, here you have to take, you should be disabled if you are there. So here, you have to take that, because it is here, it will disappear. Here we will take it as accessible value, add to the accessible value on for GST and on goods and on value, valuation type. Like this, you have to take. Okay. So this is the thing for the, if you don't want to calculate on the additional expenses, calculate GST on additional expenses. So this today, our session is over. And be careful again, see it again once again if you want any doubt, if you have any doubt. Okay. So this is the class today, and I'm closing today. And tomorrow, the same thing related to this only, we will take up automatic calculation. Okay. So with this, I'm closing this session. So bye. We'll meet in the next class.